it's a movement, crazy as it is, to go down this path, and that's going to require a bunch more metal, a bunch more silver, and a bunch more copper, and the miners just simply don't have the capacity to supply. The politicians are telling people that the direction they want to go.
Welcome back to Liberty and Finance. We have two guests. One is a returning guest, Rick Rule, the director of Sprott, and we have a new guest, Keith Neumeyer, the president and CEO of First Majestic Silver, joining us for a panel interview to discuss all things silver related. Gentlemen, thank you both for joining us here on Liberty and Finance.
Thank you, Dunnigan.
Thanks, Dunnigan. Appreciate your time.
I'm glad we were able to bring you both together. I think it'll be quite interesting and exciting for our guests. A lot of them have been just highly anticipating this and submitting questions ahead of this interview. So I'll try to keep things moving on my end so that we can see how many questions we can touch on in the short time that we have together. I'd like to kick it off with, given this dystopic year that we've been through over the last 12 plus months of COVID-related lockdowns, shutdowns, interruptions, border closings, fragmented supply chains, volatility in the equity markets, yada, yada, yada. Could you each give me kind of your top of mind major, what you consider to be the largest impacts that this strange year has had on the silver mining industry and the silver market? And then maybe tell us what you think that has revealed that maybe wasn't obvious about some of the inner workings or the implications of the market and the mining industry. So Keith, since you're a newcomer here, why don't you give us your first thoughts on what you feel are the major impacts that affected the mining industry through COVID this last year, and then what you think it might have revealed to us that we didn't know before?
Well, it's quite the question. I'm not sure how much time we have, but I could probably talk for about 30 minutes answering that question. 2020 we started off 2020 with a pretty good start. We had $18 silver. It looked like we had the wind behind us, and lo and behold, COVID hits in March, and next thing we know, we have to shut down our operations, and our costs went. Of course, our costs were still there. We had no revenue. So Q2, we lost, tens of millions of dollars just keeping everything alive and all the people employed. In Mexico, there's no safety net as there was in Europe or is currently in Europe and Canada and the United States. So we as a corporation in Mexico are obligated to pay our staff, full salaries. And that went on for a couple of months. And even today, about 10% of our workforce is what they deem as vulnerable. So we have about a little bit over 500 employees that we're currently paying full salary to stay at home because the government deems them as being overweight or diabetes or what have you. So it's added extra cost to our business. We have about an extra $6 or $7 million of costs and COVID related in 2021. But we ended the year off quite nicely. We pulled the team together. Led by Steve Holmes, our COO, who joined us in February. Can you imagine new CEO joining the business and all of a sudden having to deal with shutdowns? Quite crazy. But anyway, he did a fantastic job, and he brought the team together in Q3 and Q4, and we ended up having record Q3 and Q4. We ended the year off with around $240 million US in the bank and highly profitable the last couple of quarters. And now we're looking forward to good 2021. But it has changed the business, and I don't know how much detail you want to get into, but we do all kinds of testing and protocols. We've done about 100,000 COVID tests in the last, 3 or 4 months. We, hypothetically, you could actually get tested 3 times if you're an employee of First Majestic in a single day, because when you show up at the mine, if you're an office worker, you'll get tested, a quick test. If you happen to just go to the mill, you'll get another test. If you go to the mine, you'll get another test. It doesn't happen very often, obviously. If I was to go or COO was to go, we would be, obviously required to have these multiple tests. But most people just have the one test per day. And it's worked out well. It's worked with the communities. We've had to build extra facilities, extra camps, and keep contractors separate from the towns. And that took a while to put all that into place. But we've taken that extra step, and we've kept our minds open and kept our people safe, and we continually work on accomplishing that.
And yeah, that you started to get into there at the end, any novel mitigation strategy. That's what I was wondering, is anything that you particularly, that comes to mind is like, wow, we maybe wouldn't have thought of this anticipating, but we're glad we thought of it along the way. And it's an example of kind of that innovative spirit that First Majestic brings.
Well, we did build a couple of labs. Wheaton threw some money in, as well as Sandstorm. We contributed to the construction of 2 labs, one in the state of Sonora and one in the state of Durango. We've actually been training government staff to use these labs, because apparently there's only 2 machines like the one we bought in Durango with the assistance of Wheaton in the entire country of Mexico. Very, very high tech, almost genetic testing type of machines. And we were happy to do it, and happy to train the government on how to use them. And we brought in American trainers, and it was American equipment. And it took some time to put it all together, but they're there now. We've donated it to the government, so they're welcome to use it, and they're happy, obviously, that they have this equipment available to them. And this will continue. I don't think this is going to, change. So we just have to keep these protocols up.
Just for my clarification, you're talking about health testing or COVID testing equipment, not silver or mining testing equipment labs.
That's correct.
Okay, all right. Rick, you look across a lot of different companies in the precious metals and natural resource industries. Anything else that jumps out to you as big lessons learned or surprising takeaways from this whole COVID season and what it's done to the industry in various ways?
3 or 4 things. The first Keith touched on, the mining industry really around the world has done a really superb job in COVID response. The idea that we maintain people in close quarters in remote locations, the idea that we put them underground in close quarters. The fact that the mining industry has been able to cope as well as it was able to cope in 2020 is spectacular. What's probably more spectacular, I only know this anecdotally, not statistically, is that the local communities feel supported and protected by the mining industry. That wasn't true when I was a young man. And I suspect that the goodwill that emanates out of the incredible managements among miners in remote frontier market communities, I think will inure to the benefit of the companies for a long time. They did the right thing. They did it well. And I think they're going to be rewarded for it, which is great. Doesn't happen very often. Broader implications of COVID, I think there are a couple in the silver industry. One thing is that the refiners and the mints around the world got shut down because of COVID. So the market, at least 2 weeks ago, was almost out of retail denominated physical silver. And the physical silver shortage became acute enough that it was even for us occasionally difficult to buy institutional quantity in institutional product, partially a function of demand, of course, but also a function of the fact that the refiners who take big product and remint it as small product got shut down for COVID. The most important thing to think about, however, has been the fact that COVID gave governments cover to restrict our lives and spend our money and the money of future generations with even less care than they had in the past. COVID was a wonderful excuse for governments around the world to, at last count, conjure up $6 or $7 trillion out of thin air and further debase the currency. What? Another crisis? Why let that go to waste? Keith talked about the wind being in the sails of precious metals. My experience has been that precious metals do well when people are concerned about the purchasing power of their savings. And COVID let governments run rampant with regards to debasing currencies, with regards to negative real interest rates, which I think inures over time to the benefit of precious metals, albeit poorly to the citizenry.
Yeah, the old saying that my dog ate my homework. It's like, COVID ate my freedom, COVID ate my budget, COVID, or, but all kinds of things are our currency, it looks like.
Can I just comment on one thing Rick said?
Please.
I really appreciate Rick's comment regarding mining companies around the world, because, in a lot of cases, particularly in Mexico, First Majestic is the town. There is no safety net. When disaster hits, and this is, of course, was a major blow to all the local economies, the government's not there. If it wasn't for us and other miners around the world, and specifically in Mexico, there would be nothing left for these locals to do, and there would be no medical treatment. We're supplying vitamins, we're supplying food. We actually had trucks of food coming in to the local communities, just because the supply chains had broken down so badly they couldn't get proper supplies. Whether it's electrical infrastructure, schools, busing kids back and forth, taking workers to work or into the hospitals. We do all that work. So it's something that most people probably don't really understand.
But Keith, I'm right in saying that the community understands it and appreciates it, correct?
Yes, absolutely. When they are very happy. We're very close to our communities, and we take that responsibility extremely important.
That's something that a lot of people wouldn't automatically know without having heard it in this way. So I really appreciate you sharing that. The other thing that you mentioned in passing a couple of times, you mentioned Sandstorm, you mentioned Wheaton, and we've talked with some of the leadership of different royalty and streaming companies on here, and they've shared how they really benefit, obviously, from their relationship with the underlying mining companies, but that it's a symbiotic relationship, because as they're providing not only financial support and backing to the mining companies, they're also doing things to try to help ensure the success of the mining companies, because the mining company's success is their success. So maybe that's one more topic I just don't want to leave this without reinforcing with both you guys is how does that, and Keith, you mentioned some specific examples of equipment purchases, that sort of thing. How do the royalty and streaming companies help in a collaborative or synergistic way with First Majestic, for example, in making sure that to help reinforce your success?
Well, Wheaton actually goes out of their way and contacts us on a fairly regular basis. They actually ask us, say, can we help? What can we do? What programs can you launch for us that we could get involved in and help finance? And we're looking at some farming initiatives in the town of FR.TO right now, which surrounds the San Dimas mine, to employ the local ladies while their husbands are working, so they could actually create or farm peppers and other types of vegetables to sell to not only us as a mining company, because we'd be happy to have a local supplier rather than having to truck our produce in from Durango or the city of Durango. And also, if there's excess produce, they could sell it to the local community. And that would be a win-win for everyone. So we're very actively working on that, and Wheaton will be there to support us.
Interesting. We speak with Joel Salatin. He's a activist, farmer educator from the Polyface Farms in Virginia in the U.S. And he talks about know your farmer, know your food, shortening the supply chain, that kind of thing, eat local, produce local, that kind of thing. Very interesting how you can, this gets back to what Rick was just pointing out about supporting the local community as well. Interesting. Now that's kind of related to the next thing I wanted to talk about, which is jurisdictional risk. We're talking about jurisdictional benefits that you're making in the communities that you're involved in. We've had some concerns expressed, not just recently, but it seems like it's getting heightened, at least in my exposure, to people talking about the different countries that mining companies do business in, and we can focus on First Majestic for your specific examples. And Rick, you maybe can bring some other sidelights, but like Mexico is brought up recently as having had some concerns about some of the mining companies operating there, that sort of thing. So as you look at jurisdictional risk, are you seeing in general, would you say an increase in tensions or challenges needing to be overcome, that sort of thing? How would you characterize that, Keith?
Well, Rick and I first met when I was the president of First Quantum Minerals back in, I think it was 92 or it could have been 94 when I was in his office. Back then, telling him about, this copper company in, middle of Africa. And I'm used to going back and forth in high risk jurisdictions and as a miner, popping around the mountains in small airplanes and in the middle of storms and in a variety of countries around the planet, which I've done for, over 35 years, I'm kind of used to risk. But unfortunately, Mexico's been deteriorating, and we've been there for 19 years. And when we first arrived in Mexico, we had no security force. Our mines weren't particularly well guarded, if at all. But today we have quite a large security force, and we have a pretty aggressive government that is I wouldn't say anti-investment, but definitely not as pro foreign investment as other previous administrations have been. So so you add that to the security risks and so on, and it's becoming difficult. But I don't think it's just Mexico. I think mining as a whole around the planet, is always under a lot of scrutiny. Mining unfortunately is looked at as a dirty business, and the Canadian miners, particularly, and American and Australian miners, we take our rules very seriously, and we work at ways of always trying to improve our businesses. And we're now and a lot of technologies are now coming available to the mining sector that wasn't available to us, a few decades ago. So I'm very optimistic that the mining sector is going to even be better than it is today, 10 or 20 years from now, just from the use of technology. And we're spending a lot of time on adopting new technologies, as well as the entire mining sectors as well. So, the group is working together. We know the pressures upon us by governments around the world, but it is not as easy as it used to be to be a mining company compared to a couple of years ago.
Rick, any other comments on that?
Yeah, sure. The first thing is that political risk is where you find it. And many people are more uncomfortable with risks they don't understand than risks they do understand. I agree completely with Keith that the current administration in Mexico is less friendly to mining than I would prefer. But so is the Trudeau administration, and so is the Biden administration. The worst experience with political risk that I've ever had was in the People's Republic of California, where odd regulations caused us 13 years delay in putting the Castle Mountain mine in production. So when people talk to me about Mexican political risk, I understand it. It's just that there's no such thing as a good jurisdiction. They're all bad. Some are less bad, some are more bad. The security situation in Mexico is a different circumstance, but as Keith alluded to, the people who cause the local security problems to be problematic tend to prefer soft targets rather than hard targets. And the good thing about a mine is you can, if you want to protect it. The third point I would like to make goes back to the first point that was made, which is to say your best security, either in terms of securities risks or in terms of political reality, is your constituent community, your local community. And to the extent that you treat the people well, I've seen this around the world, they treat you well. To the extent that there are sociological security risks in the neighborhood, it's your neighbors that can help you deal with that can get word back to the other side that you probably should not do this, as an example, or can deal with their local legislator and say, if you think that you're taking us out of mining employment and getting us back to hoe and rows, growing corn and beans, you'll be unemployed too. And I think the idea that you take care of your local constituency and you deal with sociological and political challenges by taking care of your people first is something that inures to the benefit of First Majestic and all of the responsible members of the mining community. I actually think that the COVID circumstance around the world will inure to the benefit of the mining community in terms of local sociology and local politics.
Any further thoughts on that, Keith, before we move on?
No, Rick is dead on, and no, I've got no further comment. I think so.
That's sure. I wanted to ask you guys about a question that's on the mind of a lot of people. As the silver price has been much lower than its nominal highs set back in 1980 and 2011 for some time now, for several years, people are wondering how much longer can this continue? And they talk about peak silver, and that's a question is, have we passed a point where we haven't been making sufficient new exploration and discovery or developing new assets? And now with huge demand, both because of investment that Rick was referring to as difficult to find retail product, or the new green economy, wanting for electric cars or whatever vehicles, needs ever more silver. Have we reached a point where it's going to be really difficult for the silver mining industry to meet that demand, or geologically, is it just getting harder to find, et cetera? So Keith, could you kick us off with that one? Are we past peak silver, or is it just a matter of economics and higher prices to come will open up floodgates of innovation and we'll get back into business again?
Well, only time will tell. Everything comes down to price, I suppose. There's a lot of low-grade copper assets, low-grade silver assets sitting around the planet that are currently uneconomic, and if we have the right price for the right period of time to incentivize mining companies to bring some of these low-grade assets into production, who knows? Only time will tell. But if you look at the current environment, we've had 4 years of consecutive drop in mine supply. We peaked, I think, in 2015 at just shy of 900 million ounces. I think the exact number was 880 million ounces of silver production that year. 2020 number was somewhere around 760 million ounces, if memory serves me correctly. And we were in a market where we're consuming about 1 billion ounces. So this deficit has been slowly growing, and it's been coming from above ground hoards. It's been coming from recycling, silverware, you name it. It's they are getting it somewhere. So it is coming out. Now, when does that break? When does the big consumers like the Toyotas or the Apples or Samsungs of the world, when are they going to call foul or scream and say, we can't get our silver anymore? Where is it, Mr. Bank? And the bank just can't find it anywhere. I often thought, and my thesis when I put this company together was based on supply and demand. I think the two most important metals that you need in your portfolio is copper and silver. Gold is your granddaddy of all currencies, and of course it should be there as well. But you're going to make your big money on copper and silver, in my view. So when we've seen silver prices do okay over the last 5 years, but people also forget that the bull market from 2002 to 2012 wasn't straight up. Rick was probably would agree with me wholeheartedly that we thought that over that 10-year bull market, that bull market had died a couple of times. I remember 2006, it was just, but it just kept going. And, it ended quite abruptly. And I don't think anyone in the mining sector or in the financial community predicted it would have ended the way it did, but it did end. But we're in the midst of a new bull market. What that means for prices ultimately, I'm on the record for calling for triple-digit silver. Will triple-digit silver ultimately increase production? It probably will. But at the same time, what's consumption going to be? With electric cars and solar panels and all the wonderful gadgets the human race wants to use going forward, which all need silver. What is consumption? So, it's hard to really say.
It's interesting when you mentioned peak production in 2015, because that was the low of the last decade of silver prices as well. December of 2015 is when everybody goes back. People who call me trying to purchase retail investable products say, I remember where I used to get these things for, and fill in the blank, whatever the price is, but it was always the lowest back in their recent memory in 2015. Rick, you've been nodding emphatically about different aspects of the roller coaster ride of the metals.
Keith made a couple important points. The first is that real precious metals bull markets are of much longer duration and much greater dimension than most people think they are. People call me up and say, Rick, we've been in this market now for 3.5 years. Have I missed the boat? Is it over? In my experience, and Tunnigan, we've talked about this before, the Barron's Gold Mining Index chart that I refer to so often shows you that real metals bull markets are 10-year affairs. The duration is much longer than people think, and the dimension is much greater than people think. But these bull markets are punctuated by cyclical declines in secular bull markets that are frequent and breathtaking. And what we're going through right now is nothing in my own mind so much as a cyclical decline in a secular bull market. It'll shake a lot of people out, people that haven't been through it before. They won't get it right until the next bull market, but that's okay. People pay for their education. The second thing that's more important, I think, is the increasing utilization of silver, and importantly, silver's utility. And this is really important. Silver is a germicide, so it's used increasingly in water purification activities. Silver is fantastic in microelectronics, and silver is necessary for the solar revolution as a reflective. What's important to note is that a little bit of silver goes a long way. So there is demand inelasticity within the price, which is to say, if you're selling a solar panel, as an example, a $2,000 solar panel, that solar panel may have $30 or $35 worth of silver on it. If the silver price doubles, it doesn't change the price of the product that you make with it, which is to say the price of silver can go up a long way before it impacts demand for silver. Traders or speculators who get concerned about a move in the silver price from $26 to $22 seldom care about things like the reflective properties of silver or its utilization. But investors who intend to make money had better care or they're going to lose out. The final thing I'd just like to say is that my experience has taught me, and I think Keith would agree with this, that in a precious metals bull market, the first mover is gold. It moves based on fear. When gold has established the momentum, silver moves mid-market and towards the end of the market, but it moves further and it moves faster, both because the silver bug is, one would call him or her perhaps manic depressive, that is to say, like a gold bug on steroids, but also because the lower unit price of silver means that it's a more affordable store of value to people around the world who can't afford the unit cost of gold. So if you believe, as I do, that the wind is in precious metal sales as a consequence of negative real interest rates, and if you believe that this market will follow the course of prior markets, we're coming into the phase where, first of all, the precious metals markets recover. And again, if past is prologue, silver should, in my own mind, outpace gold. And silver stocks, given, and Dunnigan, we've talked about this before too, given the scarcity of them and the tiny size of the market capitalization of the legitimate silver stocks, tend to be the most volatile assets of all. My friend Doug Casey famously said, when the generalist investor moves into silver stocks, the market capitalization of real ones is so small that the result is like trying to siphon Hoover Dam through a garden hose, a quote that I know brings a smile to Keith's face. But I really do believe, and I'm not saying it's a certainty, but I think that there's a probability that the circumstance that I just laid out to you is the one that's in front of us for the next 3, 4, 5 years.
Another thing I can't help but mention, something you just said, is people should care about the reflective properties, the other things. Mm-hmm. Those are just examples of what you've talked about in the past about intrinsic value and utility of something. It isn't just, you aren't just chasing a recent price trend. If you're doing that, you're always being whipsawed by the tail wagging the dog. But if you actually understand the value of something because of its usefulness, that puts a different perspective on it. You mentioned, you used the G word, gold and silver. So let's talk about the gold-silver ratio, everyone, if we could. Keith, you've been quoted from time to time talking about the distance between the geologic ratio versus the financial ratio of those. Some people discount that. They say that doesn't matter because silver is going to be brought up as a byproduct of gold mining anyway, or copper mining anyway. So if people are going to keep digging it up but tell us what you believe to be important. What can we learn? What does the average person need to understand about the gold-silver ratio in your view?
Ultimately, I'm a supply-demand guy, and we go through periods of disconnect between markets. It could be a stock, it could be, uranium, it could be, silver, it could be whatever the case may be. I personally think there's a disconnect in the silver space right now, and it's you could point at all kinds of reasons why. There's lots of theses out there and why. There's a lot of people that know about this stuff more than me. David Morgan is a great guy to listen to because he follows this industry quite closely, and there's others out there as well. But when we got off the gold standard in the 70s and the COMEX was created in the mid 70s, and then the banks were able to create paper, silver and gold. that changed the pricing mechanism for metals forever from that point forward. And I think it's hurt the miners, quite frankly, because it was originally designed to help the miners, and help the banks, because it would give the miners a way of hedging and then give the banks a way of financing. But over the decades, it got quite crazy now, whereby the paper market trades in the silver paper market trades 1 billion ounces a day, and the miners are only producing 750 million ounces per year, and here we are trading at somewhere around 70 to 1, and we're mining 8 to 1. So if someone could explain that, I would love to know. But as far as I'm concerned, the ratio should get down. It may never hit 8 to 1. I don't know, but it shouldn't be at 71.
Rick, anything to add on gold silver ratio, what it has to teach us?
Yeah, I've never understood the necessary importance of the gold silver ratio, but I need to say that I'm not inclined to that kind of the market. What I'm inclined to is production cost, supply, and utility. I don't understand why something's relative abundance or scarcity in the Earth's crust should matter too much. It's the cost of producing it and its utility. I wholly agree with Keith that the structure of the silver market is to be charitable, mostly unexplainable. The idea that the futures market can trade 250 times the supply available for good delivery in a day strikes me as an odd market. One where the derivatives in the futures market drives the physical price rather than being based on this physical price. It's a very big tail that's wagging the dog. One of the things that I think has likely happened in the last month with the democratization of the silver narrative has been, I think, that the risk managers at some of the bigger banks who have traded the futures markets pretty aggressively probably came reasonably close to having a religious experience. And I suspect that the silver market in the future will be somewhat more in balance, which is to say that the futures market will be more related to the physical market. Certainly, a circumstance where you see very large sales of physical silver or physical gold during periods of a 24-hour day where demand is least strong. And I'm not a conspiratorialist, but that activity didn't take place to maximize somebody's return on their physical silver. It took place to manipulate's the only word you can say. The futures contract. Somebody established a laddered long or short position in the futures market, and they acted in the physicals market, selling maybe 40 or $50 million worth of metal against $1.5 billion or $2 billion position in the futures market. It happens in LIBOR, it happens in treasuries. But the idea that those people got surprised by 1 million kids on Reddit a couple of weeks ago, were I the risk manager for a large bank, that would give me cause for concern. A market that trades in a day 250 times the supply of metal available for good delivery over a year is a market that's much more prone to risk than people generally recognize. I think, too, if you believe, as I believe, that metals trade contrary to real yields, the fact that we've had a 40-year bull market in bonds where the yield has fallen from 15.6 to now 1.5 in the U.S. 10-year doesn't mean the yield can't go over. But what it says is that yield trade, which depressed precious metals, is much closer to the end than to the beginning. And that has to weigh on the risk manager's mind, too. You didn't need to manipulate precious metals prices down for the last 40 years because the market was doing it for you. That party's come to a screeching halt, I think.
Just to add to a little bit what I said earlier and touch on what Rick just touched on as well, I always thought that it'll be supply demand from commercials which would drive the silver price, and that's why I put together a silver company, because I had a thesis that we're going electronic and and then so on. So, and then silver was obviously quite critical in that movement. But of recent, we've noticed that the retail buyer has now come to this market. And it's quite exciting, I think, for the entire mining sector, because now we have this whole group of millennials that have been trading these high-tech stocks and doing quite well at it for the last, 4 or 5 years. And all of a sudden they get wind of this, metal called silver, and then start doing some work on it, and they start getting excited about it. And then all the silver gets wiped off every single retail shop on the planet in a matter of 3 days. So it was quite fascinating to see that. And, silver went through $30 there for, intraday. It didn't last very long, but, we've now got this enormous group of buyers, and maybe they're not buyers every day, but they're now looking at this sector. And it may now be the retail buyer that might actually change the mechanics of this paper market that Rick was alluding to, and only time will tell.
Yeah, I can actually say that having spoken with many of those who are calling up and looking to buy, several of them expressed to me it being a cause. They said, "I'm doing this for the cause. We're gonna show that ordinary people can make a difference here, and we don't just have masters that are keeping us, and we're gonna take something real, take something off the table and make a difference." So it's really remarkable. It's more than just some people wanting to get in on a momentum thing. It's people who are feeling a sense of purpose to that as well. It's quite interesting. You mentioned, Keith, there about your strategy and your thesis about the electronic era of the future, that sort of thing. Could we touch on that briefly, what you gentlemen both believe about this, whether it's the Green New Deal or whether it's electric vehicles, whatever that you believe to be true about our future and how it's tied to silver?
Well, we could argue about what's going to happen with oil and gas, and what's going to happen with uranium, and so on, and what technologies we should be using to electrify the planet. But we're really at the mercy of politicians. The politicians are pushing a certain narrative, and that narrative is to get rid of oil and gas and bring electric cars and this Green New Deal. And it's becoming quite global. It's not just the United States. This is a global phenomenon. And I noticed it a few years ago. I was about 4 or 5 years ago, and I flew over Tokyo, and I was quite shocked with how many solar panels I saw. Because the talk at the time was, Japan's going to turn on the nuclear reactors and so on and so forth. But when you go to some of these countries, Germany and California, and you see the movements that are going on, and they're
Did you catch that, Rick? He said some of these countries, Germany, California. Go ahead, Keith.
Well, look, and it's Rick has his particular views on this topic as well. I'm sure we could get off track a little bit and start talking crazy talk, but it's a movement, crazy as it is, to go down this path, and that's going to require a bunch more metal, a bunch more silver, and a bunch more copper, and the miners just simply don't have the capacity to supply. The politicians are telling people that the direction they want to go. So what has to happen? Either the politicians change their direction by going nuclear, or going back to nuclear, or maybe giving the world a little bit longer to weed off of oil and gas, because it's going to take 50 years. It's not going to take 10 years. And bringing in fuel cells and all other types of technologies, but they're not thinking 50 years in the future. So the only way of accomplishing what the current politicians want to accomplish is much, much higher metal prices. And that's my thesis about, $10 copper and $100 silver.
I'm too old to give you any price predictions. I've done that in the past, so I won't do that. But I agree with Keith's thesis completely. I would argue that even including the decade 2000 to 2010, that society has underinvested and misinvested in mineral exploration and mineral development. And we're living off deposits that are very long of tooth. While that's happening, the world's population is growing and becoming more rich and demanding more metal. Irrespective, I think, of what you think about oil and gas and the efficacy of oil and gas, with 7.7 billion people on Earth, 1.2 billion of whom do not have access to electricity and want it, and the rest of us wanting to increase our utilization of electricity and the various gizmos that make things, make life easier in a material sense to live. The fact that we have underinvested in materials for, I would argue, 3 decades, during the same period that our underlying demand for those materials has increased, that we're going to reach a point of stress. I'm not saying we're going to reach a breaking point, but I think we're going to reach a point of stress. When people talk to me about electronic vehicles, or electric vehicles, pardon me, that makes absolute sense in the context of California. But much more importantly, in terms of the demand for materials, is the introducing of basic electricity to 1.2 billion people, the increasing urbanization that we're seeing of people around the world, distributed power, which is a fancy way of saying batteries, and the advance of electrification through every aspect of our life, irrespective of Tesla versus General Motors. Demand for materials continues to increase while society lives off supplies that were discovered for the most part 30 years ago, pardon me. Keith, I'm searching my memory right now, and probably you're going to tell me how stupid I am about this. I don't believe that there have been more than 3 500 million ounce silver discoveries in the last 25 years. The deposits that we're living on, I mean, yours, San Dimas, that was discovered in the 1500s, for Christ's sakes. To the extent that the market penetration of solar energy around the world goes from 0.15 of 1% to 1%, means that the demand for silver in terms of its reflective capabilities, as an example, skyrockets, absolutely skyrockets. And yes, I understand that most silver is produced as a byproduct of base metals deposits. How many big copper deposits have been discovered in the last 20 years, and how many of them are going into production? This is true, I would say, across the extractive industry horizon, including, by the way, in the last 3 years in oil and gas. The new project investments haven't been taking place. The sustaining capital investments haven't been taking place. And these deposits, as Keith can tell you, you don't stand at the mine mouth and throw in water and fertilizer and have San Dimas grow more silver. You have to go find this stuff. You have to permit it. You have to finance it. You have to put it in production. So I think human demographics, if nothing else, makes the outlook very bright for silver.
And these discoveries need to be permitted. And a lot of the big discoveries, look at Barrick's big mine bordering Argentina. Yep. You know, they couldn't get it permitted. You look at Pan American's project in Argentina. You look at Escobal, you know, another one. It's not easy.
Correct. Also wanted to give you a chance, Keith, to clue us in on anything particularly new or exciting, milestones or projects or plans or promises that we see ahead through your eyes coming from First Majestic Silver.
Well, our biggest focus is technology. We've had some great inroads in technology. If you go back to 2014 and you look at our total recoveries at the time, we had global recoveries over, I think we had 5 operating mines at the time, of 65%, and that's silver. So we're throwing 35% of the silver into waste, into tailings. But that's quite common. It's, you know, silver is a little bit more challenging to recover than gold. Lots of silver mines around the world, you know, have similar types of recoveries depending on the type of rock. And back in 2014, you know, we started losing money, and I hired a couple of key hires at the time, and I built a technical services department focused specifically on adopting technology. Our global recoveries today are 88%. We sometimes get over 90%, depending on the week or the month. But that's our average recoveries for 2020 was 88%, highest ever in the company's history. We think we can get it higher than that. We think we can get it up to 95%, but it takes money and time, and of course different and a lot of R&D. We have a big lab in the state of Drago with 100 people that work there every day, just grinding through different ways of doing things, and it's quite exciting. When we're doing due diligence on our other assets for M&A, that's the lab we use for all our internal and external work. So that's really, I would say, our biggest focus.
Rick, any thoughts of things that you've seen as you watch First Majestic, as you watch the industry in general? Anything that's particularly got your eye twinkling about what First Majestic is currently doing, or what you understand that they're planning on doing that you can talk about?
Well, I don't want to swell Keith's head too much, but he does two things, maybe three things very well. The first is that his M&A strategy over 30 years and several companies has been excellent. He is willing to pay up for the right deposit, but he doesn't tend to buy in ebullient times, which is to say that keeps him from overpaying, which is a very good thing. The second thing that Keith does is he is, I think because he's a former stockbroker, extremely in touch with his constituency. He speaks to his shareholders in a language that they understand, and in any forum that he can find, including Liberty and Finance, which means he shows respect to his owners, and I would suggest that lowers his cost of capital. The third thing is that over time, people don't seem to leave his employment. I've never worked for Keith, although I've raised money for him a couple times. Which would, suggest to me that it's a well-run business. At the end of the day, when all your workers go home, what you got is a bunch of silver locked in a bunch of rock, which is to say you don't have anything. If the people feel good, and evidence of them feeling good is that they don't leave, you're doing something right.
Thanks, Rick. I really appreciate that. And, our CFO has been with the company for 15 years, our corporate secretary, 13 years. We have 500 employees in the business that have been with us for over 10 years, approximately.
That's a good to see in any business, is that employee retention, because not only does it indicate something about the culture, but it also means you've got that brain trust that continues to grow, that critical mass of experience that can build and support each other, and some of those things that the connections between people that result in some of those innovations that aren't even seen until people help each other see them. So that's rewarding to hear that.
I think another thing that you should be, I'm sure you're aware of it, but I think your listeners should be aware of, is share ownership. It still surprises me to this day, because I'm an active investor in the space, and the first thing I do is go look at the management circular to see what the heck these people own. And I'm shocked that often the board of directors doesn't own any stock. And often, maybe the CEO's got a position, but most of his compensation is in the form of stock options, right, and salary. So it's quite common for a lot of these management teams to have no skin in the game at all. And from the 18 years, other than my divorce, which I went through in 2006, where I lost 50% of my position to my ex-wife, which was kind of an unfortunate thing, but it happened. Good for her and good for my daughters. But I rebuilt that position over the next decade. And today I own more stock than I did even when I got my divorce. And each year my position increases. It's never gone backwards once.
And if people want to find out more, you mentioned the benefit of learning about companies. Rick, that's what you do all day. So Keith, if people want to find out more about First Majestic Silver, where should they go?
Firstmajestic.com, quite simple. They can follow me on Twitter, Keith_Neumeyer. I'm fairly active on Twitter as well.
All right. And Rick, oftentimes when you visit us, you suggest to people that they can get a piece, you'll give people a piece of your mind. So if people would like to get some input from you on their natural resources portfolios, what should they do?
Yes, despite my alleged retirement, I'll still be active in that. People can go to a website, SprottUSA.com/rankings, list your natural resource portfolio. I'll rank it 1 to 10. I'll comment on those companies where I think my comments might have value. And if you put charts in the question line, I will include the Barron's Gold Mining Index chart, which we talked about today, and also a 100-year commodity chart that talks about the valuations of commodities relative to other asset classes going back 100 years. And I think eloquently makes Keith's point about the utility of things like copper to the broader economy.
And folks, so that you don't lose track of these guests or any of our guests, make sure you go to libertyandfinance.com, put your name and address, email address in the left-hand side. You'll get our free newsletter, and we'll give you every interview and all of our links to all of our resources that our guests share with us. So gentlemen, Rick Rule of Sprott and Keith Neumeyer of First Majestic Silver, thanks so much for joining us here on Liberty and Finance.
If I could just say one thing, Rick, it's been a pleasure joining you today on this interview. And Dunnigan, I appreciate you putting this group together today.
Absolutely. You're welcome anytime.
Thank you. Thank you both.
Thanks for joining, gents. Take care.